off now from the high point of the day. I remember the start of trade as well. It was up close to 4 to 5% in opening tick. And from there, it's seen some bit of profit taking. And now, in fact, as we speak, the stock has moved to the low point of the day. Nimesh is here to tell us about OMCs. But Nimesh, you want to weigh in on this? This will be a bit of an overhang on the stock, I think, in the near term.
This will be an overhang in the near term for sure. But, if you look at the trajectory of the last three stake sales as well, the first stake sale happened at 1800, then the stock moved to 2200. The second sale again happened at 1800 odd, stock was at 2400. Last stake sale happened at 2400, and the stock was at 3000, right? Or now it's at 3200. So this is going to be an overhang. It's going to come for sure because again the 150-day lockup is going to end very soon. The other important thing is it's a large stake, 25%.
Yes.
But there couldn't be a single buyer to this. The simple reason is it will mean an open offer as well from somebody strategic who wants to buy. So strategic sale looks unlikely. This will come in tranches in the open market. The Ganwals have said that over the next 5 years they're going to sell out completely. Yeah. So that overhang is going to be there. But again, it's going to be a very short-term impact is what I understand. Because if you look at even the brokerages, everybody seems to be in the range between 3,500 to 4,000 in terms of target price, right? So, of course, this could be a near-term overhang. But otherwise, once it's done, I guess stock will have its own fundamentals to track, which looks very strong given that, this was, and quarter four is seasonally strong as well. So look out for numbers in quarter four as well.
Whatever has been offered has been lapped up in the past. Absolutely. So though it's an overhang, it's being lapped up and there's enough demand out there. But tell us, about OMCs. I think there's a brokerage note.
Well, so again, that's been the big talking point, right, as to how much more the OMCs can rally. Again, there are a lot of brokerage notes which are suggesting that the run-up, there is still room for these stocks to go up. In fact, I put out a piece just 2 weeks back on the PSUs. And I clearly mentioned that within the PSU basket, as far as valuations are concerned, it's the OMCs where there's still valuation comfort and the PSU bank stocks. And that's where the big traction seems to be in the last 2 weeks, right? So look what has OMCs done in the last, since Y2D. IOC is up 35% and HPCL and BPCL are up 30% each. In the last 3 months, the JPMorgan note says that they've rallied between 60% to 100%. And that's largely been driven by strong EPS upgrades and low initial valuations. Now they believe if things stand as they are, they expect further EPS upgrades in FY25 as well. So there's going to be an earnings support and EPS support for these companies going forward as well. And their preference seems to lie more on BPCL or HPCL. So that's a JPMorgan view. Even Morgan Stanley is on similar lines. They believe that there is more room for further upside in the OMC stocks. In fact, they believe that the refineries are at a multi-year re-rating and there's going to be massive earnings upgrade cycle as well. And again, even after the big run-up, these stocks are underappreciated by the investors. So that's the key reason why they expect the rally to continue. Now, just a word on the valuations. While Morgan Stanley believes that HPCL has rallied and is closing the gap with BPCL, there is still room for IOC. And why they're saying it, if you look at IOC's valuations on 1 year forward, they're trading at close to 1.2 times price to book, which is still 19% lower than one standard deviation. So that's the reason why Morgan Stanley believes there is a more room for IOC to outperform. As far as BPCL is concerned, that's trading at close to 1.5 times price to book on 1 year forward, which is at historical averages, not very high from the historical averages. And so is the case with HPCL as well. They are trading at close to 1.5 times price to book on 1 year forward, which is again very much near to the standard deviation. So there is a valuation comfort. There is going to be an earnings upgrade as well, and hence most of the sell-side analysts believe that this momentum in OMCs can continue.
All right, thanks a lot for that, Nimesh. By the way, the